This is Mamuni. Thank you so much for being Amar Baba.
Hi everyone, welcome to my channel. As we all know, GST or Goods and Services Tax is a comprehensive, multi-stage, destination-based, value-added tax. In other words, GST is a comprehensive, multi-stage, destination-based tax that is levied on every value addition. So in this video, I am going to discuss and explain in detail why GST or Goods and Services Tax is a destination-based tax with 3 simple examples step by step in the easiest way. So let's get started. Chalo, shuru kora jak. So today I am going to discuss and explain in detail why GST or Goods and Services Tax is a destination based tax with 3 simple examples. Okay? Please note, indirect taxes can be either origin-based tax or destination-based tax. In the case of origin-based tax, the goods or services will be taxed at the place of origin or at the place where goods or services are produced. Therefore, origin-based tax is also known as production-based tax. Okay? Now, what is destination-based tax? In the case of destination-based tax, the goods or services will be taxed at the place where goods or services are consumed and not at the place where goods or services are produced. I repeat, what is destination-based tax? In the case of destination-based tax, the goods or services will be taxed at the place where goods or services are consumed and not at the place where goods or services are produced. Therefore, destination-based tax is also known as consumption-based tax. Okay? Now the question is, why GST is a destination-based tax? Because the goods or services will be taxed at the place where they are consumed and not at the origin or not at the place where goods or services are produced. So GST is also known as consumption based tax. Why? Because the goods or services will be taxed at the place where they are consumed. Understood? This is the reason GST is also known as consumption based tax. So the state where they are consumed will have the right to collect GST. Please note, so the state where the goods or services are consumed will have the right to collect GST. Understood? The state charges state goods and services tax, that is sgst in short form, and the central charges cgst in short, that is central goods and services tax on the supply of all goods and services within the same state. Integrated goods and services tax, that is igst in short, is charged during the interstate supply of goods or services. Interstate means 2 different states. Okay? Now let us understand the destination based tax or consumption based tax with the help of 3 simple examples. Okay? Example number 1. Mamuni produces goods in West Bengal, in the state of West Bengal, but sells them to the consumer in the state of Maharashtra. So, Mamuni produces goods in the state of West Bengal, but sells them to the consumer in the state of Maharashtra. So, 2 states are involved here. This is known as interstate transactions. Okay? Therefore, the tax would be levied or imposed in the state of Maharashtra and not West Bengal. Why? Because Maharashtra is the consuming state. West Bengal is the producing state or manufacturing state. Why Maharashtra will collect the tax? Please remember, GST is a destination-based tax or consumption-based tax. The place of consumption will decide the state that will collect the tax. So who is the consumer state or who is the consuming state? Maharashtra. Whereas West Bengal is the producing or manufacturing state. Understood? Please note, the tax will be collected by the state of Maharashtra and not West Bengal. Why? Because GST is a destination-based tax or consumption-based tax. According to the rules of GST, the place of consumption will decide the state that will collect the tax. This is a interstate transaction, meaning two different states are involved here, West Bengal and Maharashtra. In this case, Maharashtra has the right to collect tax because the state of Maharashtra is the consumer state or Maharashtra is the consuming state and West Bengal is the producing or manufacturing state. And according to the GST rules, GST is a destination-based tax or consumption-based tax where the place of consumption will decide the state that will collect the tax. So Maharashtra will collect the tax. Understood? Thus the state where such goods are consumed has the right to collect GST. That is igst. Because here two different states are involved. That is interstate transactions. Wherever interstate transactions are involved, igst is applicable. Understood? igst stands for Integrated Goods and Services Tax. igst is applicable during interstate transactions. That is transaction between two different states. Okay? In this case, the central government will collect igst and later the amount of tax will be divided between the consumer state or the consuming state, that is Maharashtra, and the central government. Understood? Please note, example number 1 is interstate transactions, meaning transactions between two different states. And please remember, in destination-based taxation, the producing or the selling state gets nothing. That is, West Bengal did not get anything, while the consuming state or the consumer state, that is Maharashtra, received the complete share of revenue, that is igst or tax. Understood? Example of destination-based tax or consumption-based tax. This is example number 2. Mamuni produces goods in West Bengal but sells them to the consumer in the state of West Bengal. In this case, the state is the same. Producing state and the consuming state is the same. That is West Bengal. I repeat, in this case, the producing state or the manufacturing state and the consuming state is the same. That is West Bengal. This is known as intrastate transactions, meaning the transactions within the same state, that is West Bengal. Please note, this is intrastate transaction, INTRA, intrastate transactions, meaning the transactions within the same state, that is West Bengal. Please note, West Bengal is the producing or manufacturing state, as well as West Bengal is the consumer or consuming state. So this is known as intrastate transactions, meaning transaction within the same state. And in this case, sgst and cgst will be charged in the state of West Bengal as the consumption took place in the same state, West Bengal. So West Bengal is the consuming state and West Bengal has the right to collect GST. That is, in this case, sgst and cgst both. sgst stands for State Goods and Services Tax and cgst stands for Central Goods and Services Tax. Okay? So sgst and cgst is applicable during intrastate transactions, meaning the transactions within the same state, that is West Bengal in this case. Okay, understood? sgst will go to the West Bengal state government, whereas the cgst will go to the central government. In this case, the tax is divided equally between the state and the central government as per the GST Council mandate, because this is a intrastate transactions, that is transaction within the same state. So the tax will be collected by the West Bengal state government and the central government equally. Understood? Example of destination based consumption or consumption based tax. Example number 3 or the last example. Please understand, I have explained the 3 cases. Mamuni produces goods in West Bengal and exports the goods to the consumer of Australia. In this case, as the consumption has not taken place in the country India, such exports will be exempt, because in destination based taxation, exports are allowed with zero taxes. There is no GST for exports to other countries. Okay. Whereas imports are taxed on par with the domestic production. Please note, in destination based taxation, exports are allowed with zero taxes to other countries. That is, in this case, Australia. Please note, in destination based taxation, exports are allowed with zero taxes. That is, no GST to other countries in case of exports. Whereas, imports are taxed on par with the domestic production. I hope you understood and everything is clear now. I have explained you the 3 cases in detail. In case number 1, the transactions took place between 2 different states, that is interstate transactions. In the case of interstate transactions, that is the transactions between 2 different states, the tax will be collected by the consuming state or the consumer state. Understood? In the case number 2, I have shown you the transactions within the same state, that is intrastate transactions. In this case, the consuming state and the producing state is the same state. So, the state will collect the tax. The state has the right to collect the tax. In the case of number 3, where transactions took place between 2 countries, that is India and another country, that is exports. In the case of destination based taxation, exports are allowed with zero taxes, that is no taxes. Understood? Such exports will be exempt. Whereas imports are taxed on par with the domestic production. Understood? And now you must be wondering, why does the tax go to the consumer state or consuming state and not the producing or manufacturing state? Because as per GST rules, goods and services are taxed for consumption and not production. Moreover, because the consumer or customer buys the tax, and also because the consuming state is the place of destination, and that is the reason it is known as destination based tax or consumption based tax. I hope you understood, and I also hope everything is clear now. Thank you so much for watching. Thank you so much for your precious time. I sincerely hope this was helpful. I'll catch you all again in the next video. Till then, keep rising and keep shining. Bye-bye. Take care, stay safe and stay blessed always.